What do you think the Fed should do? Because I think you have not a contrarian opinion, but a very strong one.
Well, I have to tell you what a difference a couple of weeks makes. I mean, I think last time we spoke, we were talking about the fact we had changed our forecast to expect a 50 basis point increase because the data had been so strong. And now we've swung and we are siding on no change, what we would call a hawkish pause, meaning that they stand pat but even at the same time signal that they will continue to monitor, that they won't rule out further rate hikes down the road, if the situation warrants, depending on how things unfold. So in our view, it's kind of they either do nothing but talk a little bit more hawkish in terms of saying, don't assume that we're done hiking. The other option would be you raise 25 basis points and you kind of back off and say this may be it. I mean, either way, okay. I think we don't have to worry in the sense that the markets either way will assume that the Fed is not going to be taking rates as high as they had thought before all the turmoil we're seeing now.
Wait, so you're saying either way the market's okay with it? Because a lot of people think if they decide to pause, that might lead to some panic in the market because people would interpret that as, wow, things are even worse than we think they are, and the Fed's got to pause because of it.
For the moment, I will say, as you just pointed out, the market is priced for a 25 basis point increase. And the stability that we've seen over the last 2 days in financial markets, I think there's a feeling that the Fed has been given a window to go ahead and to raise rates by 25 basis points. And they may just take that option because it's in some sense free for them. If they then do what we're thinking and don't act, then perhaps there is a concern that the Fed is worried there's another shoe to drop or something. So there could be that reaction. It's also the case, though, that if they don't act, but yet we start to see or continue to see some strong inflation numbers, that if things stabilize, people will feel the Fed will end up having to do a bit more. It's okay. Really difficult.
So
I guess
there's a couple scenarios. There's a couple ways this could go, a couple different reactions. It's obviously a lot of variables, a lot of unknowns here. One thing I do know, in your recent note, you and your colleagues, you actually wrote a mock FOMC statement, basically laying out what you think the Fed should say. So just give us a quick summary. In this statement, what should the Fed be saying? My sense is that this is what you think the Fed should say to calm the markets, right?
Well, I think, first of all, the Fed has to suggest that they are watching, they are watching developments. I think they may also try to take a page out of what the ECB did last week, which is to separate sort of their inflation, responsibilities from market stability. But the bottom line is, I think in the FOMC statement, they're going to try to reassure markets in the sense that they're confident that they can address both of the challenges right now, okay. That they are committed to their inflation target, but they're very watchful of financial stability, and the Fed themselves are going to continue to be monitoring both, leaving themselves a maximum flexibility.
I read your mock statement. I think you got a few English majors over there at NatWest. You guys were having a little fun with that. All right, so I got to ask you this. A lot of people are wondering, are we going to see the dot plot come back? For everybody listening, some of our retail investors, the dot plot provides projections for the federal funds rate, with each dot representing a forecast from each Fed policymaker. So are you expecting to see it come back, and what do you think it would show if it does come back?
So it should be, every quarter they would be releasing it. It is expected that they would release it, but it's not unprecedented that they would not release a dot plot. When we went into the pandemic and the conditions were so uncertain, the Fed didn't want to give forward guidance. They didn't feel like they had enough information to confidently guide their own expectations about where the funds rate will be. I suspect that they'll keep it, but it will likely be tempered. Again, I think, now it's clear that the path in terms of interest rates is not likely to be as high as had been expected 3 months ago. And so, this is the problem, is that they're in a very difficult spot in an ever-changing dynamic environment to send a signal. So it could be that they actually don't release it today like they did during COVID, again, to give themselves maximum flexibility in a very volatile environment.